Well, then we're good, buddy. We're on. So,
good.
Dave, what a great day to have you with us.
Yeah, what they do, Draghi, and the Draghi. And
yeah. You know, I have a Mario Draghi T-shirt on. He left the bazooka. He's playing lead guitar here. He's doing All Along the Watchtower, a Jimi Hendrix song, and he sure brought out the bazookas. He sure brought out the bazookas today.
What did he announce, actually? That's the question I didn't get an answer to this morning.
Okay, lowered rates and 80 billion of new QE, took the euro down, and then during the press conference said that may be it for rate cuts. And then the euro started screaming back to the upside. It's now higher on the day at 108.50.
Really?
So the algos. So
what
the
are
algos. The algos. I don't remember the details, but the algos cleaned up buy and sell stops within a 2-hour candle. So it's the biggest range we've had in the euro in many months within a 2-hour period. So extreme volatility. And great day. I'm not sure if currency is your bailiwick, but I find it very interesting that your background, you're a chemistry professor at Cornell. That was your path that you took in life. So I'm interested. I'm interested in. Were you always interested in the markets too? Because markets are more like alchemy than chemistry. And people trying to turn lead into gold by trading. And when did you first start looking at the markets, commenting on the markets, and what was it like for you early on in your journey when you first started speculating and going rogue, like they say on Peak Prosperity, which they place your writings there as well as Zero Hedge.
So when do we go on? Do we go on in 5 minutes?
We're on.
We're on.
We're on, baby. This is live TV right now. So I just wanted to give people a brief intro on you, that the academic background you come from, and you are still on the staff teaching chemistry at Cornell, right? So the markets are an avocation for you?
Yeah, they are. So background, I was drug, sex, rock and roll as a kid, right? I didn't care about school. My dad and I used to talk about stuff at the dinner table. He was a businessman. He owned a construction company, so he knew economics at the street level. And we would talk about things. I remember some you just went blank.
I'm showing my charts.
Oh, okay.
I'm still here. So this was what? You said your stepfather?
No, my father. And
your father, okay.
And I can remember one poignant discussion where we talked about inflation, another where we talked about buying distressed assets in the Depression. Yeah, I was probably 14 years old this conversation. I remember saying to him, well, so you get rich buying real estate in the Depression, right? And he said, yeah, no one had any money. And that stuck with me because somewhere much later in life, I said, well, you got to have money at the bottom, right? And that means you got to have money at the top because you got to get out.
Right.
And so
pretty early age to be worried about things like depression while you're still, trying to get your first date and looking forward to having your driver's license. So it's interesting. I can understand how that left a big impression on you, because I remember being about the same age, Dave, and going to a Chicago Blackhawk hockey game, and the Chicago Stadium was right off Skid Row, and my father and I are driving, and you see the men gathering around the fire in a garbage can. It's 20 below wind chill, and him saying, this is what can happen to you if you don't get a good education and you don't work hard. And I never wanted to have to be standing by a garbage can during the Chicago winter to stay warm. So early on, that left an impression. Well, fear drove me to make money my whole life. How about you?
Yeah, I was a minor risk taker, and so in any event, I went to school, I was kind of a science guy, but not really. You know, drug, sex, rock and roll prepares you for nothing. But I knew I was not humanist, so I ended up majoring in biology at Cornell, and and then I got lit up on chemistry, taking a bunch of non-major chemistry. It was kind of a twisted path, and went and got my PhD at Columbia in organic chemistry, and then got to Cornell, and I stayed within organic, but I did another switch as an assistant professor. And so what actually impacts me, my thinking on markets, is I switched into a field that was complicated as hell. People, I think, thought they understood it, although they clearly did not. And over the years, pretty much everything we ever studied turned out to be wrong. And so what that did for me a little bit was instill in me the idea that the experts can all be wrong. And so I can look at a panel of, 12 and they can all agree, and I can say, yeah, but you're all full of crap. And it's a kind of a skill, and I don't think it's an arrogance. I think it's just a disbelief in expertise. And so I can, yeah, and most people couldn't look into the eyes of a global expert and say, yeah, but you're full of crap, right? I mean, that's a rare ability, especially when you.
So then I disagree with you. Being a rebel, sex, drugs, rock and roll, prepared you for being a rebel because you didn't accept the status quo. You were looking for another way, and you were challenging what was supposed to be a normal upbringing and lifestyle, and it gave you that attitude to challenge authority. So you were doing that when you were, watching ZZ Top in the 70s.
Yeah, whatever, yeah.
Yeah.
And then I pretty much just did my chemistry career paying no attention to markets whatsoever. And then around 1995, it was this funny thing. I went to lunch with a guy who was a stock picker, and I just indexed my way through my life, and he gave me a couple of tips. And what was clear is this guy, he was a salesman, and he would talk stocks with people when he visited, and the more he talked, the more he was able to go to lunch with the CEOs of companies. So this guy was brokering information, and he would travel around and talk to all the CEOs, and he'd learn what they're thinking, and then he'd pick stocks based on that. And it was just idle chatter, but he was savvy. So he told me to buy this big chunk of this company called LDDS, which was a bandwidth provider in Mississippi. And so I went in a fairly dormant IRA when I started, and then diverted another direction. I bought a chunk of the stuff. Why not, right? And it turns out that over the next sevenfold gain turned into WorldCom.
Wow.
And so that was my first taste. I didn't even know how to look up a symbol or anything at that point. And so then I got to the late 90s, and my brother sort of lit me up on this whole idea of the Y2K risk. And that turned out to be a false risk, although there's smart people who did about it. But what I did is I took a global look at the interconnectedness of the world and said, look, I don't know about computers, but we got a mess brewing here. And so when Y2K came and went, I never quite came out of my bunker. And I said, look, maybe the computer didn't trigger an event, but these markets are overvalued. They're crazy. And by then I was getting pretty good at this stuff. And
everything that people were worried about in Y2K happened after Y2K.
That's exactly right. In fact, the big guy
continues to unfold and continues to unfold. Guys like McAfee talking about the next war is a cyber war.
Right.
So it's interesting. Gold bottomed around then. We had a mania in stocks. So there were a lot of things that people were afraid of in Y2K that didn't happen then that are now percolating.
And so the interesting thing was, so I exited all of my equities by mid-99, and including getting out of Dell with 7 or 8 fold gain, and getting out of WorldCom. So I was a believer at one point, right? And I started buying gold, and I can't even remember how I got into the gold, but But must have been some guy like James Grant or something who was a gold bug. And for 2 years, I watched gold go down. I was buying around 290, and it went down to 256. And so by the time it got down to 256, I was saying, look, I can't buy any more of this crap. This is really not working. But I held it, and I've never sold an ounce. And so gold has done well. And that downdraft, those first 2 years looked like a blip by comparison.
Yeah, people were calling it an archaic relic back then. I remember. Archaic? Right, yeah. Hannibal had it on his elephant as he was crossing the Alps. You know what people are saying now? That the VIX is broken. It almost looks like a market metaphor to me that gold was archaic and the VIX is broken. So we've had a nice takeoff in gold here, Dave, from 1050. Are you in the camp that this may just be a bear market rally? I actually think that from 1300 or about that we could pull back to 1150, maybe 1100, and then head up towards 1500. I'm not in the new high camp as of yet, but do believe that it's in at least a serious maybe cyclical bull within a secular bear that peaked in 2011. What's your view?
Well, if it doesn't form a new low, then it might be a cyclical bull and a secular bull at this point, right?
Okay.
I mean,
okay.
So the key is you only bottom once, right? This is the surreal part of any market. There's some fateful moment. When you have a bubble brewing, for example, there's some fateful moment where the index reaches a high. And the high is a measure of optimism, admittedly an abstract one because it's the optimism of the algos at this point. But let's call it an optimism. And so you reach an optimistic maximum right at the very instant in which your justification for optimism has gone to zero. And so that fateful, 2:11 p.m. on a Thursday afternoon when you peaked and the Nikkei hit 39,000 not to come back for many, many decades. Yes. And everyone will hit their maximum optimism. And the same's true for a bottom. So in some fateful moment when you just don't think you can stand another second of it and you're done and who would own this yellow garbage? And that's the moment when your justification to be optimistic reaches 100%.
Do you think that we've, I know before January, which was the worst start in stock market history, that people were very sanguine. But then with the break that we had in January, we certainly are not at peak optimism in the stock market anymore. Do you think that was the peak in 2015 in May? Or do we have another run to shake out? This is the way I look at markets, Dave. I'm a skeptic. And I believe Mr. Market doesn't accommodate people, and it gave people 6 months a year to get short the S&Ps, and now everyone is salivating to sell this recovery in the S&Ps. I think that there might be a curveball that we get a new all-time high so that the bears capitulate before they pull the rug out on them. What do you think?
I don't worry about sentiment normally, except for I do notice when the sentiment gets crazy. I think what's different about this rally off 09 that will be different than every other rally is that this rally has a feeble, pathetic storyline to it. And so for example, the peak of the dot-com bubble was a great story, and the peak of the 67 bubble was a great story. And the peak of the 29 bubble was a truly phenomenal story. This peak is a stupid story. This peak is a story that says, look, everything will be fine and you should buy stocks because you got a bunch of guys with PhDs with flawed Gaussian models who will protect you, right? That's not a good story. That's absurdity. And so I think what's happening here is I think the retail person's never going to get sucked in. I think the big money is actually the stupid money this time, and I think it's the big money that's driven it here, right? They're not going to distribute this to the retail guy before this is over. Retail guy has no money. The retail guy's done. We've gutted the median 401k account for a person 55 to 61 years old is $17,000. How are you going to distribute to that guy?
Great point, Dave. Yeah, great point. So they weren't part of this recovery, therefore the anger in the streets, Bernie Sanders argument, the billionaires, the 1%, who made a lot of money on the S&P's recovering from the sign of the beast, 666 to 2130, coastal real estate. Even, the average guy you're talking about right now lost his home in '08 and is now renting from a hedge fund that bought up all the residential real estate.
Exactly. And that person didn't lose. Interestingly, that person didn't lose much. Here's the interesting storyline that I'm still trying to figure out, and that is person has no equity. They get a no down payment loan, maybe 125% loan, right, to buy a house. They buy a house. The bubble blows up. They get kicked out of their house, and now they're back to having no equity, and they're back to renting that house.
At higher prices. Rent probably higher than their mortgages were.
But someone else ate the cost of building that house. That's the interesting. The guys who ate the band.
Who ate it? The people that paid for the tarp? You and me?
Well, that's a fascinating question that I'm groping for. It seems to me that it was eaten by the Fed.
Okay.
And that it was eaten by the bailouts, and therefore it was eaten by the future, right? We pulled demand forward. We borrowed money from the future to basically bail out the system.
Sounds like that's the same thing we've done with auto sales and the same thing that the stock market may have done with central planning.
Right. And so I've never been more sanguine than now about being bearish. And that is, and I don't think I'm a contrary indicator in that sense. I don't care if it goes up more. I don't care if it goes down. I think here's my bear case in a nutshell. We've got valuations that are historically, whether you use GDP measures, price to GDP, whether you use the case Schiller P, whether you use Tobin's Q, you got valuations that all register the market at about 40% overvalued. Regression to the mean, therefore, will be painful, and we all know that regressions don't go to the mean; they go through eventually, because you spend half your time on each side. So the valuations have no profit built into them. There's no long-term profit based on these valuations. The Fed has created another frothy mess. So now you've got a refugee crisis in Europe that looks like it could turn Europe into a conflagration. We've got wars in the Middle East. We've got Draghi and central bankers hell-bent on destroying our currencies. We've got ZERP and NERP and a war on cash. I just cannot fathom that this is going to end well. And you can say, well, that's the wall of worry. Excuse me, that's skateboarding along the top of the wall of worry. That's just stupid.
Okay, and the bulls are rationalizing that we really didn't have overvaluation because they compared to 2000 when the valuations were silly stupid if it had a .com after it. But on a historical basis, even Harry Dent said the same thing. It is a bubble. Why isn't it a bubble?
Well, I don't know. I don't care the name. I just know that historically it's 40% overvalued.
Okay, so is that what you're looking for? When you talk about reversion to the mean, we'll go underneath the mean. We won't go to book value. Normally, bear markets bottom beneath book, not at book. Okay.
Right. So Tobin's Q. By the way, for those who aren't aware of these valuation models, in 2009, we reached by all these valuation models fair value, not sub-fair value. We reached fair value, and so I was looking at that, and I started to nibble at stocks in 2009, and then the central bankers got the market to jump away from me, and I said, I'm done. I'm not doing it. Now, I've been steadily buying energy through the highs and lows, and that was a great idea for a long time, and now it's a disaster. I keep buying as just a kind of a monthly allocation in my retirement account. But I was talking to Spitznagel, who says he loves the Tobin's Q the best. And I said, the Tobin's Q reached the mean, and it bounced off like a golf ball off a cart path in '09. He says, that's exactly right.
Sounds like my golf game. Army golf. Left, right.
Yeah.
Okay, so if we're talking about this type of scenario, then obviously you're not leaving the bunker that you got into many years ago. Do you think when you talk about peak optimism, we had that tremendous bull run in the dollar, and my viewpoint is that the currencies are the linchpin for everything else, that they're the center fulcrum for risk and risk off. And do you think that we reached peak optimism in the dollar because we had a huge bull market? We've been moving sideways. Do you think we're there yet, or there's more left to go in the dollar? And do you worry about the dollar losing its reserve currency status as we move forward, what you think is going to be a pretty major unwind of leverage and bear markets and equities?
No, I don't worry about it because I'm prepared for it.
Because you have gold. Because you have gold, you don't worry about the dollar.
So I didn't quite finish my gold. So I bought gold from '99 to around '04, and then I said I'm done. I've got plenty, and it's going up. And then it got beat up in 11 to 15.
What's your address?
What's my address? It's I just got another deposit box yesterday. So if you can crack the safe, it won't more.
Just kidding with you, buddy. I wouldn't be able to find the coffee cans you have buried in the backyard anymore.
Oh my God, yeah. I tell you, I don't like using the banks either, but right now that's the safest bet. So in 15, I started buying it, and I just bought. I'm starting to buy aggressively now. Okay. And the first world problem that I'm thrilled to have is that when I do the math and say if I want to increase my gold position by 5%, and I do the math, I say, hey, this is how much I have to buy. It's kind of a gasping number. That's the good news. But I'm buying gold, physical gold, from this woman who doesn't advertise and doesn't. She's sort of the hedge fund gold provider, and I was going to buy another 20% of my annual salary equivalent in gold today, actually.
Wow. Okay.
Yeah.
All right, so you don't even really trade the waves. This is just a core holding thing. It wouldn't bother you if we pulled back to 1100. That would be an opportunity.
No, of course, I'd be irritated to no end, but it couldn't get me to do anything different.
Let me ask you this: do you have food supply put away? Because I think what you're looking at is all of this going to lead to major social unrest and a tearing of the fabric that we're seeing happening in this political. It's not a silly season, it's a serious season that's kind of frightening with what we have on the U.S. stage with all the geo risk that you were talking about.
Well, I'm not there. I have been there once. I kind of almost can't go back to that level. But here's what I do believe in terms of the food supply. That it turns out I think it's New Zealand has a federal law that says you have to have 3-4 months worth of food in your house at all times. And I think that's of a country that's an island, right? And what I recommend to anyone who will listen is, look, take $100 and buy rice and put it in some sort of barrel or drum or something, and put it in some closet or some safe place, because you never know when there's going to be a month disruption, and you'll go through your food fast. You will go through. So for $50, $100, you can guarantee yourself a month's worth of food. I run much more of a pantry mechanism in my house than I used to. So I have, cases of paper towels, and I buy things by the dozen instead of one at a time. So instead of going to the store, I go to the basement, and so I'm prepared for a disruption. I'm not prepared to grow a purple mohawk.
Okay, all right. So it's going to be a crisis that's going to be short term to give us the reset that we should have had in 2008. That was avoided by what the Fed did and central banks around the world. We're finally going to get that reset, and possibly from hugely lower levels. I know the super bears are talking like 550 S&Ps, that type of number to take out the '08 low. Are you in that camp that you think that's possible in the next couple of years?
Well, I always think it's possible. You know, resets tend to show up in ways that hide them as resets. So, for example, at the end of World War II, everyone's sitting in their pile of rubble, right, across Europe, and what used to be your house is now just debris. And if you look at the pictures, it's stunning that Europe eventually came back from that. But what's also true is while you're sitting there in your pile of debris, what you're not doing is you've essentially erased all your debt. And something like 50% of the debt in Europe got vaporized by the war. And so and you say, well, you didn't fight the war to vaporize the debt, but in some way these debts get vaporized. It's a mathematical certainty that they'll get vaporized. And by a mechanism, I don't know. Maybe Donald Trump, right? I don't know. And
yeah, they say there's only two ways out of a debt issue, and that's either default or hyperinflation. Do you think?
I used to be an inflationist in the sense that I believe that the central bankers could, if they were determined, trigger inflation. Maybe even it was implicit that I had a sense that they could control the burn a little bit, or not, doesn't matter. And so gold was fine. I'm much more inclined to believe that they don't have that control, that they're not omnipotent. They think they can jam money in the system. They can't, and it's showing now. So
yeah, the emperor has no clothes this year.
The emerging market debt looks to me like it's going to bring the credit system down again. And so then what happens? Do they hyperinflate our way out, or do we end up swallowing? Do we do bail-ins? Do people lose their money from banks? By the way, I think that's a very real risk. I think the bail-in mechanisms, which most people haven't heard of.
Everyone thinks that their money in the bank is theirs. It's only a loan. It's only a loan. It's the bank's money.
Legally, it's a loan. In '06, when I could kind of smell that the end was near for that cycle, I actually had a friend send in. He is a former Louis Bacon protege. He sent a letter to his family saying, I hate to send this letter, but now it's time to get your money out of the banks. And he copied me. And we were watching this. We watched the ABX market index start to tank, and no one was paying attention to that. But that was the evidence that the credit derivatives and the credit default swaps were crashing, and the system was breaking. And so I spread my money across multiple institutions. So I diversified by institution, not only numbers, but types.
How about diversifying outside of the U.S. with bank accounts? It's not illegal. It's not easy to find a place, but no, everything in the U.S., huh? Because I know Doug Casey recommends having a foreign bank account so that you have political diversification.
Except for, do you really want to have oceans and borders between you and your money? Not me. I know guys like who have gold in Switzerland or Hong Kong. If I'm going to have gold, I want to be able to put it in a suitcase. Exactly. And so I have no interest. I could handle, I guess, in Canada, because I can get across the damn St. Lawrence River to get to Canada. But no, I don't want to. I don't want to have to trust another government that's possibly less trustworthy than my own.
Gold in a suitcase reminds me of a story of this guy who knew he was going to die and he didn't want to leave his money to his kids because they never worked. He didn't want to leave any inheritance to his kids, so he liquidated all his stocks, real estate, and converted everything into gold and cut a deal with an angel that St. Peter would let him come in with one suitcase. So the guy passes, and it's full of gold bullion. So he gets to the pearly gates, and St. Peter says, you can't come in with a suit. You can't bring anything. He said, no, we made this arrangement. You gave me the okay. He goes, oh, yes, I remember. Let me see what you have in there. And so he opens his suitcase and shows St. Peter the gold, and St. Peter asks him, why did you bring pavement? So,
no, I'm a guy who runs gold holding company that has vaults in cities around the world. And what inspired him to open this thing was, I think he had gold in somewhere in Europe, and he got told that they're kicking him out. And he found himself standing on a street corner with this big trunk on wheels filled with gold, not knowing what to do next.
okay, so are you planning on participating as a speculator? I learned in bear markets, Dave. You know, I got into the business in the late 70s, early 80s, and my first trade was short gold from 200 when they made it legal again, and it went to 100. Okay, so it was almost preconditioned for down is faster. Are you looking to take advantage of this unwind and your sanguine bearishness in the stock market in any way? And would ETFs be a good way to approach it?
Not a big fan of ETFs. I'm not a big fan of shorting. I've shorted twice. One was in 2000 to around 2003, and as you can imagine, that worked well. I did it through a fund, a Prudent Bear fund run by a friend of mine, Doug Nolan, and then I took my son's college fund in, I think it was around 2005, and I market neutralized it with a short. And that's the extent of it. And that's the only short I've done. That worked well because I carried that through, and then I liquidated that thing around March of 2009 to capture the hedge. But short.
I was thinking about possibly another candidate that might have reached peak or is getting close to reaching peak optimism. And with that, I'm talking about sovereign debt in the U.S. With the 10-year yield. A lot of people are talking about it going to 1% or under 1% in this environment. Do you think that we might be reaching that state of peak optimism in treasuries now?
Again, kind of not much opinion. I greatly fear systems that I don't understand, and I certainly don't understand the treasury market. But so I think you're right. I think the bull market in treasuries, it's now extraordinarily long in the tooth. At some
over
point,
30 years.
Right, and it will end, and we will go into a period of rising rates, and people who have never seen that will not understand how much damage that will inflict. What that'll do to equity markets and housing markets and all sorts of things.
Okay.
But I think the more immediate sovereign debt is going to be the emerging market debt, specifically the ones based on petrodollars, and that's playing out now, right? This is not exactly clairvoyant. But I wrote about this a little bit last year, and I think sovereign debt. I'm told that in 2017, remember the mortgage resets that I think it was UBS or one of these guys plotted, and you could see the mortgage prices coming. Well, there's supposedly an analogous plot of sovereign debt rollover.
In 2017, next year.
At 2017. So I said in my sort of write-up, I said, put this on your 2016 calendar because you want to get out first, right? Know about that before the rains came. So I think we're going to have a lot of sovereign debt collapses. And that, therefore, will bring the banks to their knees.
Okay.
And then the banks, and who knows? The plot line gets too murky after that.
Okay, so why don't we wrap it with what you've been saying in your writings in Peak Prosperity as well as Zero Hedge recently for us to keep an eye on to the scenarios that you're talking about?
Pay attention to John Hussman. John Hussman has this great approach where he basically says, look at these valuations historically when you're here, what's your return over the next 10 years? Think long term. I think your listeners are probably shorter term, is my guess. But based on these valuations, if we regress to the mean in 10 years, let's say we're not going to regress in 10 years, that's optimism, right? You think you're
Right.
somehow stay elevated for 10. Maybe you can. It's been a long stretch here, but and you'll make nothing, right? And what I'll tell you is the boomers are not rich enough to make nothing over 10 years. Just like the Japanese investors couldn't afford to lose 80% over 25 years. My big fear, by the way, is time, not price. Time kills you. You know, if you have a secular bear market in something that you own, it not only takes out your net worth, but it takes out, you know, a third of your investing lifetime too.
Interesting. Yeah, because money comes and goes, time is gone forever, and
Right.
also when and also when you're stuck in something that's not working, it's very difficult to pull the trigger to do anything else until you have a recovery. So you also, besides losing that time, have all that opportunity cost, right?
Yeah, so I'm 65% cash right now. I mean,
Okay.
when I go to one of these banks and I do something at the bank, they look at me and they go, "You really want all that cash?" I go, "Yeah, I do." So I get
Do
phone
they give
calls.
you a hard time? You know, there are some people, if you go there, I've had this experience, you know, you ask for more than $5,000 in cash out of your account, that they actually ask you why. And the
I've
war
stopped,
on cat,
I've
go
stopped
ahead.
doing. I've stopped
Okay.
getting the cash
I see.
out of
Okay.
fear of an asset seizure.
Okay. Interesting.
Yeah, I don't
Okay.
take the risk is way too high for me now.
You mean if you're saying that if the Fed gets wind of a pattern of you withdrawing cash from your account, that you pop up on the radar now.
So the legality of taking out cash was that above 10,000, the bank was by law supposed to notify the feds that you're taking out cash.
Right.
The law now states that if the bank spots a pattern that looks like you're trying to exceed 10,000 incrementally, they're supposed to notify the feds. And then
Wow.
you get guys like Diamond and Willem Weeder and these guys saying we got to get rid of all cash. This war on cash is an insidious thing.
You
And
think, well, do you think that we're going to end up digital? I mean, that would give the government, Big Brother, Orwellian, Huxley type scenarios where they know everything, get rid of the $100 bill, start going to negative interest rates to force you to spend money. Do you think that we're headed into a cryptocurrency?
I think they're trying to take us there. I mean, you've got guys out there like Larry Summers, right, former Secretary of the Treasury, talking about how we should get rid of the big denomination bills because they promote crime. And I'm
Yeah.
thinking, when does the Secretary of the Treasury give a damn about drug cartels? And then when you read these articles that talk about the evils of drug crime and criminal behavior and how cash promotes it, you get about 5 paragraphs into one of these articles and they say, and oh, by the way, it would make monetary policy easier. And you go, that's the money shot right there. They want to be able to control the flow of money, and they can't. Cash protects you. So that's and gold ought to rock under those conditions.
You know, they
Gold,
say, Dave, yeah, you know, they say, Dave, and it almost happened in '08, that cash on hand at banks, the Fed, everywhere else, is minuscule compared to the digital currency
oh, it is.
dollars that we
Oh,
have.
it is.
And that bank run, it wouldn't take much to create bank runs and banking problems if people withdrew their cash, because there's not enough cash compared to digital dollar denominated obligations.
Well, the cash is microscopic, I think. I mean, it's really
Right,
tiny. And
right.
and there was a run on the banks in '09 to the extent that there's a run on the credit system of the banks, right? There were, you know, places like Cornell had trouble meeting payroll because their entire payroll structure was based on the idea of ultra short-term debt. So they essentially used a credit card to pay payroll, and then they'd replenish it, right? But the whole payroll was not hooked to some account with millions in cash. It was hooked to a credit line. And when the credit line seized, payroll mechanism seized. So that was a run on the bank.
Interesting.
But
What do you
but the
think of Yeah. Okay. Go ahead.
Go ahead.
So, why don't we, I know I said we were going to wrap it before, but I'm having too good of a time talking to you, Dave. But I would like to wrap it now with your view of what's happening here and what you think is going to happen in the presidential election. Or is it possible that we have some type of crisis before November so that elections are called off?
I don't buy the call-off model unless it truly catastrophic. I think that sort of crosses over the doomster dotted line for me. And you keep hearing Obama wants to whatever, but
Yeah.
What I think we will see in the elections is I think we're seeing the dark side of democracy here. There's some amazing quotes by Debbie Wasserman Schultz saying that the reason they have superdelegates is so grassroots candidates can't compete. What a stunning statement she made.
Wow.
You've got the entire political media complex against Trump, and they're not beating him. And they're talking about beating Trump like he's Saddam Hussein. And the idea of Trump being president is not a settling idea for me, but the idea that the entire establishment has decided that we the people aren't going to get a vote is an even less settling idea for me. And so I think what we're going to see is we're going to find out that we don't get a vote, and that Trump will be ushered off stage, presumably by gruesome mechanisms. I think, for example, this puts tinfoil hat right in my hand. You look at Kansas. I think the Kansas primary that went to Cruz in a landslide was completely rigged. And the evidence is that morning a fairly prominent pollster came out with Trump was double digits ahead. Pollsters don't miss by that much. So it's like a 35% shift from the most recent poll. I think they went in, they said, we got to dump a bunch of votes into Cruz. Both parties agree. So no one's going to call them on it.
Yeah,
Hillary
interesting. I thought that only happened in Chicago, where you're allowed to vote even after you passed away a few times. So
it happened in Pennsylvania supposedly too in the last election. WikiLeaks tried that out.
Dave, what a fascinating conversation. I'm so glad I reached out to you and asked you to join us. And I could say that you're a sanguine bear economically, financial asset-wise, and a very convicted bull in the yellow metal. So I have a new tagline for you. Don't wait to buy gold. Buy gold and wait.
Right. That's exactly right.
So, Dave, go ahead.
No, we're done. I'm fine. I'm good.
Okay. So thanks again, Dave, for hanging out with us here at FX Street and for sharing your views. There were many pearls in there. And I hope that we could talk again before we have this disruption that might happen. And I'll be over for some rice someday.
Yeah. Bring it on.
All right. Good hunting, Dave. Thanks again, buddy.
See you later.
Nice to meet you. Bye-bye.